Let's get into it.
Let's tear it down. Let's look at the Progressive. I wonder if Flo is listening here.
I don't think so, but
Probably not. Let's talk about Progressive. Their symbol is PGR, and that is Progressive Insurance. They're on the insurance, property, and casualty industry. Only 1.1% shares on the short side. That's not bad. Institutional ownership's 88%. They've got a pretty decent PE of 12, but the industry is actually below that at 11.4. Price of sales 1.5 versus 1.2. And again, these are valuation ratios. You want them lower than the industry average, not higher. That's a better buy. Price to book value 3.6 versus 1.8. Price to cash flow 7.7 versus 7.2. And unfortunately, no PEG ratio there. I'm disappointed with that because a PEG ratio tells you what you're paying for the future growth of the company. That's your PE divided by the growth. We do see the earnings per share over the last year for Progressive up 29%. That's well above the industry growth at 7.8. Sales for Progressive up 14.5. That's about 3 times the industry growth at 5.7. Unfortunately, the analysts give a 5-year earnings per share growth estimate of only minus 0.2, but the industry is at minus 21.9, so not good for the insurance industry. Progressive does pay a 2.2% dividend, using 27% of their earnings to pay that out. Let's take a look at the balance sheet. Again, this is an insurance company. Financial company is a little bit different than your normal company. There's no current ratio. We do have a debt to equity of only 0.2. That's the same as the industry. That is good. Net profit margin for Progressive does check in at 12.7 versus 10.6. Return on equity is very good at 32, and return on invested capital also good at 27. They have a nice free cash flow. We like that free cash flow. That's money coming in they can use. $16.4 billion, double the industry at $7.4 billion. Chase, what do you got?
Yeah, so current price here for Progressive, again, their ticker symbol is PGR, $219.09. The 52-week range, the low here, $217.20. Closer to that than the high that we saw of $292.99. Now, if we go forward for Progressive, we go out here to December 2026. I see estimated earnings per share is $16.41. I get a target sell of $272.41. That's an estimated return here of about 24%. So it wouldn't quite be in the buy category for us. It would still be a hold. But the interesting thing here is you got to watch out. There might be earnings revisions going forward. It looked like they tumbled about 8% last week after reporting earnings of $4.45 per share. That missed the estimate of $5.04. I guess a major factor that hurt it was a policy change in Florida that caps an insurer's profit.
Oh, we talked about that in the newsletter. I think it's going to
haven't gone out yet, actually. That should be in next week's newsletter.
Well, okay, good. And I did notice, too, on Progressive, the range of analysts is very high. The low estimate is $12.84. The high is $20.25. That tells me a lot of uncertainty about that $16.41 earning for 2026.
I'm kind of surprised Florida came out and capped profits, but I know that they've had some huge issues over hurricanes and insurance just skyrocketing there. I mean, it's a difficult state to insure.
Can't control business. So, all right, we're going to take a quick break here.